presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Create the perfect relationship between you and your body. Treat your body with all love, honor, gratitude, and respect. When you make it a goal to adore your body and accept yourself completely, you learn to have the perfect relationship with anyone else you are with. Remember, folks, we're just a machine, man. Take care of it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 357, Nasdaq's up 115, S&Ps are up 38. Percentage-wise out here, what you have the Dow Industrials trading up 1.4%, Nasdaq 1.6, S&Ps 1.4. Gold contract's up $4.60, trading at $13.40 an ounce. If we take a look at this gold market, what you're going to see out here is that bottom line, gold is basically moving sideways all day long until, let's see, just at about, 12:30, 1 o'clock. 12:30, it basically has a small sign of strength. We'll take it. Bottom line, you're up 470 right now, and that is after rejecting a lower price on Friday, which normally can be a very tough day inside the metals market. Gold contract wants to run up to this 1375, which is the high of January 25th. We go take a look at the GDX, the equities. GDX out here, sideways move, that does need a sign of strength. 15 million shares that, bottom line went sideways last Friday, going sideways today. I do expect we're going to build a bit of strength to try to get up into the 2251 area. Silver also caught a small bid out here at 12:30 this afternoon. Silver right now is trading at a price point. It's up 0.9%, up 14 cents. You've done 68,000 contracts. Silver is putting its nose over the last 4 or 5 days of trading. What we do need, bottom line, is that a sign of strength to see how we get up into this 16.80 area to the $17 area. Now, notes and bonds, folks, they just don't want to stop. And when you take a look at the note and the bond market, you got to basically take a look at this broad market on a continual basis and keep looking at it even on a technical basis. The bottom line is that bonds want higher price, lower yield. On a fundamental basis, it can twist your mind because the Fed, no doubt, is saying they're going up in short-term rates. But guess what? They keep buying this 10-year note and they keep buying the 30-year bond. What you have out here today, you're over the highs of the lower consolidation, which is 120.23. We broke out of those on the 27th of March, and you have some strength here. That's on the 10-year. 30-year, same type of setup inside the 30-year. 30-year right now trading flat, 146.01, and this is way over the bottom of the consolidation. The bottom of the consolidation here was 144.20. Your high volume spike that we got on the 6th of February was 146.21, and this thing is laying there, and it looks to me like bottom line is that what you get game here is like 152. There's not much in between the 152 area, which is 6 points higher than what we are because of the way that we actually came down. We came down fast and furious from 153 in December all the way down to the lows of 141. Bottom line, the 141 was on the 21st of February, and that's where the bonds at this particular point had bottomed out, meaning we had the highest yield, lowest price. King dollar. King dollar still can't handle price. Pretty amazing. King dollar had every right to basically get up into and get over the March 1st high. March 1st high out here, 90 bucks, 0.490. What does it do? Bottom line, on the 28th of March, nice day, had the price spread, had volume, had all of the above. Guess what? Gets up to 90.295 on Friday. The high that it was going after is 90.490. Couldn't handle it. Closes below the consolidation, the high end of the consolidation. Comes off that consolidation today, and you get volume on the way down. 21,000. Not monster volume, but that's certainly much higher volume than when we were trading up there for 5 days in a row. When we're up there at 5 days in a row, you're trading about 16 to 17,000 contracts per day. So bottom line, dollar wants lower price. 10 and 30 years wants higher price. Gold wants higher price. The real kicker is going to be as we come into the close out here with this S&P. So S&P right now, monster move on the top side. We went from a price point on the lows out here today of 26.13. We get up to 26.53. Right now, we are at 10 points off of that high. And guess what? 10 points in this market, folks, is fast, furious, and all of the above. About 20 minutes ago, we hit down at the 26.37. I expect that is going to get at least retested. Why? Because you had a seller down there. We did 45,000 contracts at that level. Some of the higher volume equities out here in this low volume market. We get Bank of America up 72 cents. GE is down 10 cents. That's having a hard time holding $13 period. You get Intel up $1.30. Merck is up $3. We have Monsanto up $7.60. Monsanto and Bayer, the Justice Department gave them basically the go-ahead. They're not going to get in the middle of that deal. They're going to sell some assets, but the bottom line, they're going to allow the takeover to happen. Inside the NDX 100, the strength versus the weakness inside the NDX, you have NetTease up 4%. Broadcom is up 3.6%. Intuitive Surgical is up 3.1%. Taken away from it, you get O'Reilly Automotive down 1.6%. Tesla is off 1.2%. Inside the Dow Industrials, let's see the strength versus the weakness inside the Dow. We know it's always Boeing that's pushing the Dow around, that's for sure. So positive points, Boeing, oh, look at this, interesting. Where is she? No, the mover inside the Dow today is Goldman. Goldman's putting 36 positive points. Boeing's only putting 15. Goldman Sachs and Apple. Apple are the numbers. Stay right there, folks. We're going to be coming right back. We have the Dow Industrials right now trading up 320. NASDAQ is up 101. S&Ps are up 34. Then we'll be coming back with our man, Mr. Steve Rhodes. We're going to be talking markets. Come right back, folks. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 280. You got the Nasdaq up 89. S&P's up 29. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Now, don't forget, folks, Steve does a great show here every trading day, 1 to 2 Eastern Standard Time. He also has a great newsletter, Mastering Probability. Now, you can commit to Mastering Probability right now. 30-day money-back guarantee. You're going to come to a great workshop this Wednesday, 6 to 7 Eastern Standard Time, 5 to 6 Eastern Standard Time. We get our man, Mr. Steve Rhodes, to tell us all about it. What's going on, brother?
Well, you know, just preparing for the workshop. What was great is I love the Masters golf tournament.
Yes.
So perfect weekend, actually, for me before a workshop, because I don't mind actually kind of staying in and watching, especially Sunday. Sunday's a great day to watch the Masters, so yeah, I can do it with the sound off, so to speak, and just focus in on the workshop that I'm providing for subscribers this weekend. So that was my weekend.
It was
How about
quite
yours?
a competition, wasn't it? Yeah.
Yeah, really, you know, just great out there. Patrick Reed, he's the guy that ended up winning the tournament, played amazing. He's teamed up with Jordan Spieth at a couple of different match play tournaments, and that's where we really got to see the test of his mettle, and just he played just like I've seen him play in match play, and it was kind of interesting.
Really?
Because yesterday, so he doesn't tee off till like 2:40 in the afternoon yesterday, and his morning was spent listening to all the commentators on the Golf Channel or ESPN, and nobody picked him. And so one guy picked him to possibly. Now he had like a 3 or 4 stroke lead going into it, and he used that as motivation to go prove. Right, so
yeah.
he used the mere fact that he's got a lead, and everybody said he couldn't get it done. So that was kind of it's kind of a cool thing.
It is.
Yeah, just like the motivation of this market here. It has to be.
We're in the most competitive deal in the world in the market. There's no doubt, man. Yeah. Not taking it any away from the golfers. I mean, they're insane. They but yeah, every day, right?
It's kind of like he had a nice lead, a lead going into the final round. It must be similar to those folks that haven't yet acquired the technical tools that you and I use, others use, Basil, David, and so forth out here, because it's interesting, because you see the markets up 250, 350, 400 points, and you would then say, okay, must be a bottom. But if we take a look, for me, it's all about the NQ at this stage here. It's the NASDAQ that is really driving things. And if we take a look, during my show today, we saw the NASDAQ, it was up nicely, but it was right up against this little red line, my little red line. Yeah. It's really referred to as the oscillator and change line, and it was so clear to be able to come on and say, look, folks, let's not overplay this.
I heard you. I heard you.
Price hasn't been above this level or that red line since March 15th. And if it doesn't get above that level, again, it's like it's another failure. You like to use the terminology a failure on price and volume and so forth, And so right now at 321, even the markets are up nicely. It's still a failure. It still is a failure. If price closes above that, then we have a different thing out there. So part of that, and really part of the market, for me, it's all about the NDX 100. I can take this time period and take us back to 2015. And it's interesting, Tom, that in 2015, the NDX 100 also completed a topping pattern. It's a similar pattern that precedes every bear market. Doesn't have to turn into a bear market, but at least gives you a topping signal. Yes. Now, subscribers and I actually used that this morning to say, okay, we've got some bottoming signals out here. But that bottoming signal, price has got to get above this level inside the NQ, which it hasn't done just yet. And so we can't get overly bearish, can't get certainly overly bullish out here. And really, if we take that to the larger spectrum of what occurred in 2015, we had this topping pattern that occurred out here. It's present right now, by the way, inside the NDX 100, and it turned out to be about a one-year consolidation pattern. And that's where folks can get chopped up. It can be a great trading market. So the same tools that subscribers are going to use and learn with regard to all the patterns that are the pattern that has been the most consistent pattern before every bear market, they're going to be able to use that for their shorter-term trading as well. And that turned into, interestingly enough, about a 900-point consolidation area. If we take a look at where we're at right now, this topping pattern inside the NASDAQ 100, we're at about a 900-point consolidation. Give or take a few bucks out there.
It's amazing. I mean, since your show, where the NASDAQ is off 90 points.
Yeah. Well, look, the average price movement inside these indices is just, it's beautiful. It's a beautiful setup for shorter-term intraday type traders out there. And it's possible, it is possible that we may be in a similar or the same 900-point range that we were in back in 2015. That's really important. It's so important to be able to identify what type of market that we are in. So I'm seeing those same signals. If we take a look at the horizontal trading ranges, by the way, folks that sign up for the workshop for Wednesday are also going to get access to a one-hour workshop showing them how to utilize and identify these horizontal trading ranges. And the yellow rectangles that are on my screen, we've got the one from back in 2015. What's really great about this is they help us to also understand some resistance and some support levels. And back in 2015, it was the horizontal trading range of 39.53 that continued to be tested and held as a support level. Well, fast forward to today, that number is 63.50. And so as long as 63.50, give or take a few points, holds, that's going to say, okay, we may be in this horizontal trading range of about 900 points. And that's important because if we see a break below the consolidation, well, then we could see it move into the 57.51, 51.52. If we get down below this 63.50 level, NDX has had a price move of about 12% from high to low. If we get down below that, well, that's going to open up a 23. That's going to get us into that so-called bear market territory. So it's really pertinent with regard to Wednesday's workshop. If we take a look at the semiconductor index, a similar type of pattern. It's given us a topping signal. It was the same topping signal that occurred in 2015. 2015 led to a consolidation. This is really uncanny. It is like exact to the dollar. The price correction we've had so far right now in 2018 is the exact same price correction that we had in 2015. Now, the key here is if that level breaks, we're looking at 1173 to the downside or more out there. So the point is that another bear market is coming, and I really want to be able to teach subscribers how to be able to spot it, exactly the 5 different patterns that precede every bear market, exactly when you get the confirm signal, the step-by-step process, what confirms the top, when it is to exit in case you decide to play to the short side, or maybe we have subscribers that really can't go to the short side, but they can go to cash inside their accounts out there.
Sure.
And then how to use these patterns to be able to identify a bottom, how to really capitalize on being able to come into the market. So, depending on your age, you may have most or all of your nest eggs sit in your retirement accounts. So you really want to be able to know how to spot that next bear market. And that's what we'll do Wednesday, April 11th, 5 to 6 p.m., like you said. And folks don't have to be there because it's on their members page for the next 30 days, and they have direct access to me with any questions. In fact, if they can't be there.
And come right over to our website at TFNN, folks. You're going to see it right in the top of the carousel. Mastering probability, 30 days, money-back guarantee, great workshop. Not only a great workshop, folks, you get the whole library that you're going to get in there that Steve has done for you. Go to TFNN.com right at the very top. Steve, thanks so much. Look forward to the show tomorrow and, of course, the workshop Wednesday.
Thank you, Tom.
Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 248. You get the NASDAQ up 83. S&Ps are up 27. Let's go over and take a look at those S&Ps. So the E-mini when we started off this program, let's put this, okay, so, bingo. Okay, so when we're doing the update there, you had the high volume downtick at that 2637. Bottom line, you had 45,000 contracts there. It not only got tested, what happened here is that right before we had our man Mr. Steve Rhodes on, this thing came barreling down, broke the swing with 40,000, and then now you get a high volume low at 48,000. What's going to get intriguing watching this close is this. So the 48,000 at 20 past the 3 was going into how we went topside this morning at 10:30 with 48, I believe. Yeah, with 48. So now the battle's set up right here. What the S&P would have to do right now, the top of that range on that bar, folks, is 2635. So the longer that it takes the S&P to get over the 2635, the higher. Let's picture that we only got right now, you get 30 minutes into, well, you get 45 minutes into the close of the futures, you get really 30 minutes into the close of the marketplace. The longer that it takes to get over that number, if it doesn't get over it, let's say in the next 10, 15 minutes, the higher the probability is it's going to go to the bottom of that number, which is 2627. Because what you have, you get the same volume characteristic there. That's what's going on. To be exact, it's 48,520 that it came into, and it came into 48,697. So it's pretty cool how that's set up. Now let's go over to the NQs and take a look at the NQs, because then you're going to look for another clue as to how did the NQs come into that area. So with the NQs, what we had is this. Okay, so you had the first area, same spike down at 40 past 2. That came in with 11,000 contracts. It blew that away inside the NASDAQ with 10,000, and now we have a high volume low that's laying out here with 13,000. Now the 13,000 was going into 17. So you can see the NASDAQ is stronger. Well, it's stronger in the context of how it went into that bar. That being said, we're at 65.32. The top of that bar, we're deep into that bar, because the top of that bar is 65.46. The bottom of that bar is 65.17. So your probability there actually is higher that you're going to come back down to the 65.17 as we come into the close. So we'll see how the whole thing shakes out. Let's go look at the IWM and to the small caps. Small caps out here really have already given it up. Small caps got to a high today of 152.60. Right now you're a $1.30 lower than that. We're at 151.31. You know, also this last get-go down does have volume. 357,000 contracts, 357,000 shares were coming into this morning with 400,000. You know, so when you start putting those together, your probability gets a little bit higher that we're going to get a little more pressure coming into this close out here today. Some of the higher, well, let's actually go look at the, we get Facebook that's going to be in front of Congress for 2 days. Facebook's not going anywhere. We're up $1.48. That's off. We're trading 158. That's off a high of 195. You still have the high volume low that's laying out there at 149. I expect that 149 is going to get tested. If we go to Google, we take a look at Google. Google has been trying to jump the creek, been building cause to jump the creek. Bottom line, out here today, you know, you're already $10 off the high. You hit 1,039. We're at 1,023. This baby here, well, I'll put this back on a weekly so you can really see how this is set up. When you put these ranges on it, these hard, you know, basically how it's hitting the lows versus the highs, it's hitting these lows with big volume, man. First one was 15 million on the weekly. That was the week of February 9th. The next one was 11.8 million. That was the week of the 10th. And then we went higher with 10.5. And what we've just done out here today is that we try to test the high of last week, haven't been able to do it. What this is setting up, I mean, I'll put this back on the daily so you can see how this is set up. This is a clean creek. And what a clean creek means, folks, these creeks, I remember when I first learned with Wyckoff, they're really, at the beginning, it's kind of hard to see, okay, what the heck is a creek? And it's more art than science. And what it is that in this particular case with Google, it's pretty cool how it's set up, because what it is set up in the context of a gap that went higher on the 26th to the 27th of October. You know, and that's when we really broke topside in a big way. Google went from $972 October 26th and made that run up to 1,086. Now, we made the run back, and that's the creek, man. That's the creek. And if, in fact, we jump that creek, Google is going to be in tough shape, because your next level down is pretty dramatic inside Google. In fact, let me bring it up for you so you can see this next level down. So we take this, you put this back, and what you're going to see here, the next level down basically would get you down to 894. You know, and it looks to me like 894 is really, well, we'll see what happens. But it looks like 894 is actually game. And if we get down there and you have an expansion of volume, and when you do jump creeks, whether they're going downtown or going uptown, most times you do get some juice behind that move. We go back over to the E-minis for a second. What they're doing out here, they're coming down, and it looks to me like we're getting an expansion of volume. So we're 26.28. The number that, yeah, so bottom line is that, let's see. Yeah, you get 4 minutes left in this 10-minute bar. This thing's going after the lows. It's going to blow away 26.27. We're at 26.28 right now. 48,000 contracts. We've already done 30,000. You get 4 minutes left. So your next level there is that, this is yeah, this will be wild if the next level actually is 26.22. And the 26.22 is the get-go actually of the opening bell today. So if we take a look at the Dow, what you're going to see in the Dow Industrials, Dow Industrials right now, they had got to a price point of 24,373. And 373, yeah, you gave up some good numbers here, man. These ABC structures on the way down are still in place, and they're in place in quite a large way, because what you do have here is that you had that surge forward. It goes up to the high. The S&P went up to how we opened on Friday, gave it up right at that particular point. We're going to have lighter volume out here right now. Yeah, you've done 417,000 on NYSE, so that'll tick in about maybe 700. It's going to be hard to get 700 actually. On the composite, where we're at, you're at 1.6 billion, so you're going to tick in maybe at 2 billion. And so what that is a market moving to higher price, contracting on volume in a huge way, and we'll see, bottom line, where these prices hold into the close. But if we hold even right here, that's going to be a heavy failure, a market that wants to go downtown. And the bonds are the ones that you want to keep your eye on, folks, because the bonds have been saying that all day long. When you get a market that's up 1.5%, and the 10-year note and the 30-year bond will not go down in price and up in yield, you want to pay attention to it. Stay right there, folks. We'll come right back. Dow Industrials are up 221. NASDAQ is up 71. S&Ps are up 24. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 177, Nasdaq's up 62, S&Ps are up 19, and we get some numbers off the high. The Dow is like 252 off its high, folks. You have the Dow right now up 0.7%, Nasdaq up 0.8, S&Ps are up 1.1. So bottom line is that you still got some heavy action coming into this close out here. We go take a look at the Walmart. Let's go over to Walmart and take a look at Walmart. So Walmart, folks, bottom line, off highs of 109. You're at 86.65. Walmart looks to me like it's also setting up a big ABC down, and this is why. What's sticking out like a sore thumb on Walmart is that on the 2nd of April, we came down to 84.84. You did a volume of 19 million. Bottom line is that you were going into 16 million. So you could really say that, you know, bottom line, you broke the B, did it with volume. I would want to see it with more conviction, I can tell you that. The problem with Walmart is that this has been going sideways since March 2nd, and every one of these little spikes do have volume in them on the downside. So that is building cause for lower price. Now, that's the first part. The second part, which basically makes sense, is that equities always like to go back to where they started from, meaning even in breakout areas. And in Walmart's case, that's where Walmart did go topside in October of 2017. They had a big week, the week of the 13th. It went from a price point of 79 to 86.95, and the top of that, that's what's saving Walmart right now. That's how that's shaken out. So we'll see, you know, if in fact it's going to break down off that point, or are you going to reject lower price? And that rejection, if that's what we're going to do, it'll be the rejection of the high of that breakout area. We go take a look at the XLF, because what we're going to have starting this Friday we have bank numbers coming out in a huge way. JP Morgan, Bank of America, they're all coming out with their numbers. We have with the XLF today, failure, big time too. The XLF was coming into 89 million shares. You've done 43 million. You hit a price point of 27.87, got over the highs of Friday, gave it up. So bottom line, can't bust them up. Guess what? It's going to try to bust them down. If we go take a look at JP Morgan, trading $111.25. That's still into your down day from February 5th. If we go look at Bank of America, BAC, which was one of the leaders out here today, you're up 43 cents. You're at 30.06, same type of setup. Bottom line, couldn't hold the highs of last Wednesday nor Thursday. I mean, Thursday nor Friday. And Bank of America, let's see, they're coming out the 16th. So that's not until next Monday, I believe. Versus the 13th. Let's see what they got here. Yeah, so Bank of America is on Monday. JP Morgan is on Friday. Let's go see where Berkshire Hathaway is, BRK. Berkshire is the largest weighting structure inside that. Berkshire can't get any traction. That's trading inside the range from the February 6th time frame also. That's, okay, that's May 4th, different animal. Goldman Sachs, let's go see what Goldman is. Goldman right now trading up 421, not bad. Now that's a stronger deal than JP Morgan right now, or Bank of America. Still in the range, though. Still in the range from the February 5th time frame, but that does look stronger. That is on the 17th. So that's going to be on Tuesday. They're going to be coming out on Tuesday. Apple tried to catch a bid up here today. Apple off those highs, 173 Apple was at, now you're at 171. Let's go see what the king Amazon is up to. Yeah, Amazon has this high volume low that hasn't been tested yet either, which is 1265. You were up as high as 1425, 1438 today. So you're 18 bucks off of that high. Big numbers, man. Big numbers all across the board out here. There's no two ways about that. GM, let's go take a look at GM. Then we'll go to Tesla. Yeah, GM couldn't handle a higher price out here at $38. Tesla, TSLA. So Tesla, the counter trend bounce on Tesla was about as intense as you can get. We went from 244 up to 309 in 5 trading days. You hit the 309 area again today. You got to a higher high, lighter volume, now you gave it up. So good old Tesla is going to be going, this is so classic, man. This is intense. So Tesla had jumped the creek, folks, okay? That jumped the creek. Bottom line is that you're down in volume, man. This is like a classic. Oh, this is like, Tesla's in trouble, man. This is like a classic. You jump the creek, you go back up, you test on lighter volume, and then see you don't want to be you. And that's how that baby is shaking out. Let's go over and take a look at the silver market for a couple of our targets out here. So I still want to see, I like the idea of what silver did today. What you had earlier today, folks, is this. Silver was up 3 pennies. Now, that doesn't sound like a lot, and it's not a lot. But in that context, gold wasn't moving at all. So it's like, this is early this morning. I was doing the gold proof. This is like 6:30, 7 o'clock this morning. So silver came through today. I mean, that's the bottom line. It stuck its nose up just above the trading of last Thursday and Friday. But what we do want to see, we want to see a sign of strength out here. That's what you're looking for. If you're looking inside the gold market and we're looking at the nugget right now, which is the direction 3 times bull position of the New York Gold Miners Index, you're at $24.38. I like that setup. You know, that setup saying to me, this thing wants to run into 26, 27. You know, it got lower today, rejected lower price, had lighter volume, and what all the gold stocks have, folks, is that they have a high volume spike on February 14th. Keep your eye on that. The reason being is that a couple of these equities have already got above it, and that's a huge deal. If we go look at Gold Corp, that high volume spike was $13.80. Gold Corp's been one of the strongest ones after this downdraft. That's already above it. That's a huge plus. The minus, okay, if you're watching the gold market, the minus is Franco-Nevada, which is having a hard time getting a bid, and Rango Resources. Those are our 2 danger points. In both cases, those stocks have always been really strong. They're not strong. Royal Gold has taken up the banner, basically. And Royal Gold today, you know, is down 66 cents. So, you know, we are not in the clear yet. Let's put it that way. There's major divergence out here. Market-wise, it's toast. You get the Dow up 133, NASDAQ up 50, S&P's up 14, and the S&P's are giving it up, and they're giving it up in spades. What you have here, let me pull this back. We know when we started the program, the first test, the volume was there. The volume is extraordinary now. Someone just threw 64,000 contracts in on a 10-minute, and it's going into 53,000, so that's saying now that you got game going right to the lows of the open out here today at 9 o'clock, which is 26.13, and we're at 26.20. Stay right there, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, don't forget, you come to Steve's workshop. That workshop is going to be Wednesday from 5 to 6 Eastern Standard Time. And the 5 reasons traders and investors fail to spot a bear market. Check it out on the front page of TFNN. You get his workshop, of course, and you get his newsletter, 30 days money-back guarantee. If we go over to the DAX in Germany and the FTSE in London, folks, you want to keep your head wrapped around this. And the reason being, even out here earlier today, and you know their markets closed a long time before us, they couldn't hold price we went to 12,371. In the DAX, you closed down 100 points. You closed 100 points lower than that and trading up only 20 points. That being said, you are also still at the lows of February 6th. The lows of February 6th are basically 30 points higher than where we are, but that's problematic because that's in a lower range now. The FTSE in London, same setup in the FTSE in London. The FTSE in London got a high out there of 72.09 today. Bottom line ended up being 11 points, and that is still in the lower range. So when you take a look at those babies, they are always open before us. Bottom line is that when they can't take off to higher price and they're trading at these February lows, they continue to build cause, and that cause that they're building is cause for lower price. So I'd suggest that you stay tuned to them because they trade well, let's put it this way. They're industrial companies inside both the FTSE and the DAX, as is our Dow Industrials. They're large multinational companies that do business all over the world. That's the real bottom line. We go take a look at the SPY. What you're going to see with the SPY, you get that ABC down still in place. Bottom line, you made it to over the highs of Friday. Bottom line, you already broke the B point. 244 is coming at you, and we're 261 right now. Stay right there, folks. We'll be coming back with more numbers after the close. Dow Industrials, giving it up big time, too. Dow is up by 75 right now. NASDAQ is only up by 9 points, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks, and a great week. Don't make assumptions. Learn to ask questions. It's always better to ask questions than to make an assumption. Have the courage to ask questions until you're as clear as you can be. Once you hear the answer to a question, you won't have to make the assumption because you'll know the truth. You know, I've been reading these cards forever, and I dig these cards. This one's always a tough one, though. What happens if they don't tell you the truth? Market-wise, let's take a look at it out here. We have the Dow Industrials up 46, NASDAQ up 35, S&P's up 6. Percentage-wise out here, what you had, folks, is this, is that you had the Dow Industrials up 0.2%, NASDAQ 0.5, S&P's 0.6. That being said, this market gave it up on price, gave it up on volume in an incredible way, actually. If we go take a look at the Dow Industrials, what you're going to see up here, the high today in the Dow Industrials was 24,373. Bottom line is that we gave up 400 points coming into the close. Big number. S&Ps, we take a look at the SPY. What you're going to see with the SPY, SPY was traded up to 264.84. Right now, that was $5.11. Bottom line, you end up $1.11. We did 96 million shares versus 179 million. So what you have out here is that you still have an ABC structure on the way down. You have a confirmed ABC structure on the way down. Inside the SPY, the low of the SPY on the 9th of February is 261. Your price projection on the SPY, folks, is 244. It's a monster number, man. It is a monster number. NDX 100. NDX 100 also has a confirmed ABC structure on the way down. That also gave it up in spades. Got to a high of 160.88, which would have been up $4.20. Bottom line, end up closing up $1.10. You did 39 million shares versus 59 million downtown. Small caps also did the same type of setup. Small caps went from a price point of 152.60 to 150.54. Now, let's go into the note market. So all day long out here, you know, these notes have continued to basically not go down on price, up on yield. And that being in the face of, you know, the Fed saying, hey, listen, we're going to continue to go up on short-term rates. And in fact, if we look at the Fed fund probability, the probability is still there that at the May 2nd meeting, there's a 72% chance that they are going to go up on short-term rates. What has happened is that then the next 1%, I mean a quarter percent, 25 basis points, would go in August. That's at 56%. Now, other than that, the scale goes down dramatically. That being said, they were buying bonds all day long. You know, what notes and bonds had done is that they rejected lower price. They're in the high, they're not in the higher range, but what they did, they're on top of a consolidation that they had been in, and they started that consolidation in February, beginning of February. They broke out of it about 10 trading days ago. They're not only out of it, bottom line looks to me like they want a lot higher price. We look at this 10-year because the 10-year and the 30-year had come down so fast. Bottom line, you can go up just as fast once you have built this base, and there's a beautiful base here. So, you know, 10-year is game at 123, and right now your yield on the 10-year, we are at 2.779. 30-year is even stronger. The 30-year bottom line is already over at the February 6th level. Well, actually, we're right underneath it. 146.21 is the number there. That's a high-volume spike. This thing wants higher price. 30-year can get up into this 153.14 area. So you're talking about big numbers. And the correlation there, of course, comes down that when they are basically buying into the bond market, you've got to be careful about inside the equity market as to, you know, what is actually happening. King dollar. So let's go over and take a look at King dollar. What do we have with King dollar? King dollar right now came into its swing point from March 1st. Didn't have the juice to take it out. Didn't even get to the high, actually. 90.490 is the number. We got to a price point out here, is that we got to 90.295. That was on Friday. Couldn't handle that price. We got up there with 22,000 contracts. Now, that's not bad contracts, particularly after we had a nice sign of strength on the 28th. March 28th was a big day. That got up to 89.820. What does it do? Can't handle it. Not only that it can't handle it, folks, what you have is this. You came off this with 22,000 contracts, which is not huge contract volume. It's decent. But you closed into all the highs going all the way back to January 15th. With that setting up, is that setting up going after the low of 87, 820. That being said, what you want to remember, depending on how long you've been listening to the program, is that the dollar is in a much larger ABC structure on the way down. And it's a long time one. I mean, what ends up happening is that you're talking about, we're talking about monthly ABC structure on the way down. You know, from January of 2017, that's when the January 3rd, it actually topped out at 103. Does the first leg down into 90, which was on September of 2017. We broke that with conviction January of this year. So this number here, we're at 89,530. That number that it wants to go after is into the 83s. And the low is 78 of this little structure that we're in. What continues to hold it up, you know, if you're a bull in the dollar, what continues to hold it up is the highs of 2008. We're right at it, as well as the highs of 2010. You know, we've been building cars here for 3 months. And it'll take quite a bit to get into that. That's the real bottom line. And you can see that that's what's happening. You get under 80, let's say 88, and that will be fast and furious down to the 83 to 79 area. That's where we're at right now. And that's where the struggle is inside the metals market, inside gold, inside silver, at those levels. That's the same type of level on the other side. Stay right there, folks. We'll be coming right back. We had the Dow Industrials close up 46, NASDAQ up 35, S&P's up 14. Coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We had the Dow Industrials close up 46, NASDAQ up 35, S&P's up 13, and quite a close, folks. Bottom line is that you had some pressure basically all afternoon. The first leg down, let's see, so it was right before I actually got on the air. If we take a look at this, ESM 8. So you had your first leg down. Let me pull this back. Here it is. Okay, so when I got on the air, there it is right there. So the first leg down was at 1440. What's going to be intriguing here is to see, and this is where, you know, whether it's news articles that come out sooner or later, or actually folks see exactly what's going on, because I'm not quite sure when this happened, but by the close out here, what you had is that the Southern District of New York, now this wouldn't be the Mueller deal. This is the Southern District of New York, basically, these are the feds, though, came into Michael Cohen's, which is Trump's personal lawyer, and raided that place today. It was done on the aspect that it looks like they got a referral from the Mueller district. What it says here, Cohen's attorney, Stephen Ryan, said agents seized documents using several search warrants after special counsel Robert Mueller made a referral to the prosecutors in the Southern District of New York. Where this comes from, it's... okay, so let's see. The FBI conducted a raid Monday on the office of President Donald Trump's long-term lawyer, who had been a key figure in several legal issues, including the investigations into the Russia election, as well as the payment to the adult film actress. Bottom line, what's intriguing there is that I'm wondering, you know, we don't, I guess we'll find out what time that actually got notified, but that first spike down at 20 past, might have been either someone's in that building, and then by the time that we were coming into the close, that S&P went pretty quick from 2644 down into the 2610 area. That being said, you know, and I've said this many times, there always seems to be something, folks. When markets want to go down and markets want to go up, that's just what they do. What gets so intriguing to me about markets is that when you see these counter-trend bounces on a market that has been going down with volume, it's amazing the type of counter-trend bounce that you can get and how it looks so powerful, but yet gives it up so quick. So the way this is set up is going to be pretty intense, because what we did is this. The S&P almost got to the highs of Friday. The SPY, it almost hit it. The highs of Friday before this downdraft was 265.11. We got to 264.84. Gave it up big. So what that has now is that the first high volume low in the marketplace, right? February 5th is the number. Well, the S&P is below February 5th price. $263.11 is the number. You get a confirmed ABC structure on the way down. That confirmed ABC structure on the way down is a nasty number. It's 244. So, number one, which is the biggest one to take out of this, is that you're below your downdraft, what was a high volume. The second part of it is if we go back and we take a look at, like, okay, now where's 244? Well, 244 is where we broke topside in October. And that's a big number, because a lot of that was a nice leg up, there's no doubt. We went from 244 September 1st, October 1st, straight up into 286. The problem with any type of straight line moves is that when a straight line move breaks and hasn't built the floor, it's just as easy to go downtown. And that's kind of where I suspect this is laying out. That's in your S&P. We take a look at the NASDAQ composite, and what you're going to see in the composite is that on the February 5th time frame, 158 is the number. Well, guess what? The Qs are also below 158. They're at 157.73. Now, the differential inside the Qs is that the ABC structure down the Qs is 148. It's still 9 points down. What is so unusual about the Qs and the ABC structure is that in both cases, the S&P as well as the NASDAQ did a complex ABC down. When you do a complex ABC down or up, what it means is this, is you break a B point, you break it with volume, you go on the opposite side of the B point again, you go on it with lighter volume. You come back down and you do not have to break it again on volume. The NASDAQ was so weak that it actually did break it on volume again. That's a setup that your probability gets pretty high that you're going to go to 248. And if we bring this back and we take a look at, okay, where's 248 sticking out? So we get the high volume high of 150. 248 is at October also. It's the same setup. It's that October setup. And there is a floor there. You know, we had built the floor from 143 in June of 2017 coming all the way over. So bottom line is that let's go do the IWM. See, the IWM hasn't done an ABC structure on the way down. Well, maybe it has. One second. So that's 35 million. 35 million. Look, I just missed it. So the IWM went like this. The B point is 150. 35.7 million. When we broke that on so the B point is established March 23rd. We broke that on April 2nd. When we broke that, however, we broke it on 35 million, so it was 700,000 short. That being said, you're into the bar of February 5th. February 5th, the top of that bar was 153, the bottom is 147. So we'll see how the rest of this shakes out. Some of the higher volume stocks in this, let's see, actually, let's go look at the indices, because it should have thrown some volume in at the end. Yeah, you still did light volume, but it threw some volume in. We did 799 million in the NYSE. That's going against 879. Inside the composite, what we did is that we did 2 billion going against 2.3 billion. So bottom line is that when you do take a look at that texture, you can see that you try to get into higher price, had lighter volume, gave it up in spades. GE, let's go take a look at GE. GE, folks, has not only been getting toasted. GE looks to me like, man, this thing is just ready to just about blow apart again and get into the highs of the lows. And we're right next to it. You know, the high of the low from 2009 is $11.35. GE has hit a low thus far of last week. It would have been, I think, yeah, $12.73. So you're talking about it's basically, what, 12, you're about $1.50 away. What I expect you're going to actually see out here is that once it gets into it, we are going to probably hear a lot more stories about GE, and 570 is probably going to be game. And that's going to be, people are going to be basically, they're not going to actually, they're going to have a hard time comprehending that GE was cooking their books for so many years. But that's, I suspect, what we're going to find out. Facebook going in front of Congress next few days. Facebook high volume low 149, trading 157. They get problems coming at them. Stay right there, folks. We're coming right back. Dow finished up 46, Nasdaq up 15. No, Nasdaq up 35. S&P's up 13. We're coming right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to the tech sector. We take a look at the XLK. Now, the XLK, folks, bottom line is that inside this XLK, these are all the big dogs inside tech. You got Apple's 14%. You got Microsoft 11%. This is the weighting structures. Facebook is 6. Google is 10. Intel is 3.8. Visa is 3. You got Cisco being 3 and Verizon, as well as Marvell 3. So what do we have out here today? Now, what had happened inside the good old tech sector, the XLK, we went from a price point of $69 January, straight down 5 days later, you're at 60. So you basically come down 15% in all of 10 trading days. Then what do? Monster rally, right? Go from $60, make a new high at 71. Give it up. We're at 64.55. 64.55, folks. We are right at the lower end of February 5th. We got to a price point today of $65.81. Gave it up and gave it up on volume. So picture it. You went down Friday on 20 million. You went to a higher price today on 10.9, gave it up. And what do you have there? Bottom line is that that baby also is, oh, this is pretty cool. I got an ABC here, 26. Yeah, you get an ABC down, too. Okay, so your A point on this is 71.34. Your B point is 64. So you're about 6.5 points. So that gets you about a 61. And 60 is the high volume low. So that's where that baby wants to go. If we go to the SMHs, that is another ABC structure on the way down. That's a confirmed ABC structure on the way down. That baby blown away its B point big time, too. Did it on the 28th of March. This also gave it up today, got to $102, closed at 100. You did volume of 6 million versus downtown of 6.9. So 6.4 to 6.9. So that isn't as crucial, as bad as the rest of the market. Yeah, you can, but bottom line, you can see, still did it. The Let's go into the oil market first. Let's take a look at physical oil. So physical oil out here today traded up 2%, $1.28. This range is pretty incredible, actually, that it's been staying up at these levels when the XLE continues that it can't catch a bid. Bottom line, you did 613,000 contracts out here. And the 613 is coming into 750. So you get a consolidation, and it's going to need. I suspect we're going to, try to get into lower price, but that's not a bad counter trend bounce out here. If we take a look at the XLE, what you're going to see is that the XLE just couldn't handle a higher price. Dramatically lighter volume. These XLE stocks want a lot lower. This is a monster. It looks to be a monster ABC structure on the way down. What we did today is that we got to $68.53. It closed out at $67.67. You're coming into 18 million to 10 million. Big number. If you get a chance today, what you want to do is that you want to read the, if you're in the futures market, you want to read an article that is out there, particularly the corn, wheat, the grain market, about the CME and large block trades. I'm going to get my head wrapped around this. It was quite an article that was out there today because what the article about in the journal was this, folks. Here, let's bring this up for a second. So picture, if you've traded futures and any type of futures, the CME is the largest basically futures market in the world. Okay, so you have bids, you have offers, right? Well, what the CME has been allowing is that they've been allowing large producers and large hedgers to basically do monster block trades, and those block trades are not registered for 15 minutes. So what I got out of the article was a couple different things. The first part was like, okay, man, when you're trading futures, when you're trading anything, folks, what you're always trying to find is where's price and volume and where is the natural price of the marketplace. Well, when you're reading this article, you can see that there's no such thing, to me, there'd be no such thing as a natural price. And the reason being is this. What happens is that when you are actually a cash buyer, even in the futures market, and you're one of the largest players, you always can make a better deal. So now picture what happens here. You can make a better deal. Let's say you may make a better deal, you may not make a better deal. It doesn't matter either way in the context of what I'm going to talk about, because what I'm talking about is that you get your bids and your offers lined up. Then you get a side deal that's going on. Well, once the side deal goes on, and you know that what a producer and what a consumer and the two biggest producers and consumers in the market will pay, well, what do you think? You get 15 minutes to be in the futures market because you know there's going to be, number one, there's no transparency, but number two, and let me just bring this up because they're talking about the amount of trades that have already been done inside the wheat market, inside the corn market. So let's just bring up corn for a second. So let's picture this. So well, if you look at a July corn's going to $3.99 a bushel. Bottom line, this is, we just went from 362 3 months ago to $3.99. Okay, that's per bushel, right? So picture you just made a deal. You're basically one of the large producers out here. You just made a deal. You just got corn, and you got the corn at $3.89, right? Well, guess what? If you got it at $3.89, you know that that's the real price. That's all you're going to pay. You can do a couple different things. It doesn't stop you from going in and hedging, okay? Bottom line, what does that mean? That means that the price of corn on the exchange right now for 15 minutes is higher than you know you can buy it for. So if you did that, what you're going to do is sell the heck out of it until it's down 10 cents. If it's just the opposite way, that someone wouldn't sell you that product at that, and they want to sell you that product at $4.09, well, guess what? It would just be the other side of that. Okay? It's a big number. And let's go into the wheat market. And one of our targets. Mike, there's no doubt that thing was up 390. And you want to read this article, Mike, because, let me pull this up 1 second. We're going to wrap our heads around how this works, because it looks to me, okay, so wheat, big numbers up here today, up 18 cents, 4.90 a bushel. Definitely has the juice behind it. That is saying, yeah, wheat can go to 5.18. That's what it's saying. There's no doubt about that. So to get back to this article again for a second, so the basis and where folks are actually already complaining, the retail trade. This is the first time I ever read something like this, okay? So I suspect the retail trade is just finding out about it because of the article in the journal. That's the first part. The second part, though, the people that are really complaining about it are the hedges that are large hedges, but not the biggest hedges. It'd be the tear down, you know, which is still, I suspect, millions of dollars. But guess what? These are all the big dogs, and so the little rough dogs underneath them. And I'd be worrying, too, if I was in that business in a huge way. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome, folks. Sorry about that. Okay, so let's go over. We're gonna basically talk about notes. We're gonna talk about bonds, and the reason I want to do that is this: is that you're going to hear a lot more right now about the aspect of an inverted yield curve. So if we first look at the 10-year, bottom line is that what you're going to see inside this 10-year is that the 10-year bottomed out on February 15th, $119, $119.14. Right now, the actual yield on that is 2.77. Now, an inverted yield curve, when you hear this, it's going to be between the 2 and the 10. That's what, well, you can get any type of 2 to 5 to 10 to 30. They can all invert. But when you hear about, if you get an inverted yield curve, that there's theories out there that whether it's a year, 2 years later, you're going to get a recession. And we'll get into that in a second too, but I just want to show you how this works. So you can actually see that how close it really is, and like why would someone lend money to the government at 2-year rate and lend it to the government at the same 10-year rate? And as that inverts, in fact, lend money to the government on a 10-year rate lower than a 2-year rate. So right now what you're looking at, if you're watching Tiger TV, you're looking at a 2-year rate. The 2-year rate is 2.276. Now, if I bring this back a year, you're going to see how dramatically this has changed. For the last 12 months, the low was 1.1. The high is 2.3. You see on a percentage basis, what? It's almost 100%, okay? So just keep the number in mind, 2.27. That's your 2-year. Your 10-year is 2.75. So what you have there is you have 50 basis points. That's 0.5%. So what the market is saying is that at 0.5%, that the market is willing to lend at this particular point for 10 years and only get 0.5% more. Okay, so now let's get into the aspect of what it may or may not mean. If we go over, I'll get you a quote first from Dudley. Let's see, where are we? Okay, right there, I believe. Not this one, one second. So you have plenty of analysts that are saying that, hey, listen, if you invert, the bottom line is that, your probability gets higher that you are going to have a recession. There's plenty of folks, including Dudley from the Fed, that's saying, well, there's really not enough information out there that you want to bank on it. Okay, so let's see where else we go. Okay, the shape of the curve is not just a bond wonk matter either, given it has implications for the longevity of America's economic economy, bank earnings, consumer behavior, and share prices. The consumer behavior and share prices, I would say that's crucial to understand, and there's no doubt, because what anyone that is in large businesses are always going to pay attention to interest rate structure. The way our companies are leveraged, they better pay attention to interest rate structure, folks, because the leverage on a lot of these companies are pretty incredible. This guy here from, the curve flattening is a big deal. The chief economist of Nexus North America, the market is telling you something, and part of its overall risk aversion is back. This comes because the Fed has taken liquidity out of the marketplace. Let's see. The 1 month, well, listen to this one too, yeah. So you can get the short end is the big deal. Now the 1 month overnight swap rate is also a big deal, because what has happened then is that this also, let's see, the 1 month U.S. overnight index swap rate traded in the forward market 2 years into the future is above that 3 years from now. That inversion has only happened 3 times in 20 years. 2005, 2000, and 1988. JP Morgan strategist, wrote in a note today. Okay, let me get my head wrapped around this for a second. Okay, the 1-month U.S. overnight index swap rate traded in the forward market 2 years into the future above that seen 3 years from now. Okay, cool. Okay, so here, watch this. So you could do a swap rate 3 years from now, but yet they will give you that cheaper than a 1-month rate right now. The 1-month rate actually jumped over the 3-year. That's insane. So these are all things we definitely want to pay attention to. The reason being, you know, the camp's not in that. Yeah, you would go into a recession, but we do know that what we have had is this: is that you have had an expansion. Picture it. We started in 2006, the crash, right? Well, we're 2018. You know, my take is that the economy's going fine. There's you know, but you want to pay attention to everything. That's my take. My take also, I mean, we're not in Boston, we're not in New York. I don't know how they can afford the real estate up in those areas, that's for sure. And there may be a hit there, there may not be a hit. But what I've seen in Florida is that you don't have the same aspect of debt structure that people were over their head as we had in 2004, 5, and 6. And what you don't also have is that you definitely don't have the amount of paper, meaning mortgage paper, because I can see that every day. You don't have the amount of mortgage paper that is in default or close to default. The real question is going to be, is it a longer-term deal? Is it, you know, 6 months down the road, 7 months down the road, that you do have a market that starts pulling back? And if this market continues to pull back, I mean, you get a deep pullback, and folks haven't taken money out of the market, that's where you can see, you know, some problems. Because what ends up happening is that what you do have is the aspect of everyone's feeling pretty good right now. Markets have gone up. They've gone up a lot. But guess what? You got to take money out of the market if, in fact, you're going to get a pullback. Because what ends up happening, of course, when you get a pullback, you never really got the market. You never really got the money out of the market. And if you don't get the money out of the market, let me tell you something. It can turn into a problem. It can turn into a problem unless you're going to be in the market for the next 20 or 30 years. That's kind of how it goes. Because these cycles are important to wrap your head around. Dow finished up 46, NASDAQ up 35, S&P's up 12. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go over and take a look at the Asian market. So Nikkei out here, folks. Last night, Nikkei was up 110 bucks. You're at 21,674. That being said, guess what? You are still at the area from that downdraft of February 6th. The top of that is 22,200. That bottom line also has a high volume low down at the lows at 20,000. So that baby is a game also for lower price. We go take a look at the, let's go into Shanghai. 1 second, there we go. So Shanghai last night, Hang Seng rather, Hang Seng was up 1.2% last night, trading at a price point of 30,229. Same setup, man. Same setup. You want to take a look at these world markets, folks. Bottom line is that the world markets can't get out of this February 5th level. It's not even close. Shanghai is at 30,229. That's 300 below the February 5th level. So we go from Asia opening in approximately 4 to 5 hours. You go from there and you go over to Europe. The DAX in Germany, the FTSE and the UK, both are right at the lows of February 6th also. Then you have our markets, of course, who gave it up in spades today right across all the indices. King dollar looks like it wants lower price. Metals want higher price. They haven't been able to what you have is where we are with this dollar, 89.545. It's trying to get into the highs of 2008 and 2010, and we've been there for 3 months. Bottom line, we'll see how that shakes out. I expect we're going to get into them. Why? Because you get that large ABC down on a monthly basis that wants to go to 83. Bottom line, get your stops in, folks. And the broad market. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get 'em, folks.